And I'm curious sort of what you think is going on with the impact of the ETF on the price of Bitcoin.
I think generally it's been a good thing and it's created more demand, but you got to keep in mind that Bitcoin is smart, fast, strong money. You can't teleport your $10 million apartment to Singapore, lever it up 10 to 1 and short $100 million worth of New York real estate. But you can short $100 million worth of Bitcoin by borrowing $10 million. So you have a lot of fast money traders, a lot of volatility, and that will cause and ripple into volatility in the ETFs. Bitcoin's up 44% a year on average since then. The S&P's up 12%. And since we levered it, we're up 825%. The number one performing stock in the S&P is NVIDIA, up 821% as of Friday. So we beat every single company in the S&P index using a Bitcoin strategy.
Today we are joined by Michael Saylor, who shares his upcoming prediction for Bitcoin and why he's bullish in 2024. Thanks to BlackRock's significant influence, there's an increasingly strong belief that, in the not-too-distant future, we'll see a monumental surge in capital pouring into Bitcoin, along with a strategy that Saylor has been predicting for quite some time. The story has become even bigger in 2024 because of the Bitcoin ETFs, with thousands of institutional investors across the United States now buying Bitcoin. The demand for the leading digital asset has increased exponentially, and more than the daily supply. Because the supply has been reduced by half, this has caused a never-before-seen supply-demand imbalance for Bitcoin, and Saylor says everything is about to change. Don't forget, our partners at Jamie Tree Finance have launched a daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free, which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
You know, Bitcoin's 0.1% of the capital in the world right now. I think it's going to go to 7% of the capital.
7%?
My long-term forecast is it's going to go to 13 million over 21 years.
13 million.
13 million, but what is it 5 years from now? In your 4-year calculus?
You know, it's been growing 44% a year with about a 40 to 50 vol. I would think it'll move on at 40%, then click down to 35, then 30, then 25, and at some point it'll be the S&P return plus 8%, and it'll be the S&P vol plus 8% because it's always going to be a more global, open, free capital market. Bitcoin's an expression in this view that you want to invest in an asset without counterparty risk, which means you don't want to be counterparty to a country, a currency, a city, a company, a commodity, or a culture, right? So people think it's a risky thing. It's all about people wanting to not take risk. They don't want to guess whether Picasso's or real estate in New York or NVIDIA stock will be higher in 10 years. They want to buy money. They want to buy 1/21 millionth of all the money in the world forever. Since August 10th of 2020, MicroStrategy's bought about $8.3 billion worth of Bitcoin, and Bitcoin's up 44% a year on average since then. The S&P's up 12%. And since we levered it, we're up 825%. The number one performing stock in the S&P is NVIDIA, up 821% as of Friday. So we beat every single company in the S&P index using a Bitcoin strategy. We still run the software business, and it's generally a cash cow for us. But our primary business is a Bitcoin development company. So what we're doing is we're securitizing Bitcoin. We're selling convertible bonds for people that don't want the full volatility and all the risk of Bitcoin. Some people want 150% risk, right? So some people want highly levered equity, and they trade the options. And so we have a very big, deep, rich options market. We've got high performance equity, and then we've basically pioneered the Bitcoin-backed bond market by issuing all of these convertible bonds that are backed by 5x more Bitcoin collateral. If you're investing in the ETF, you're getting 1-for-1 performance, paying 25 basis point fee, no yield. When we issue a $1 billion convertible bond paying 1% interest, we're capturing a 50% premium or 50% type BTC yield on that up front, and then we capture another yield on the back end. So if what you wanted was a sort of a tax-deferred yield on your asset, or you wanted to tap into the convertible bond market, like if you wanted to borrow $1 billion for a percent,
right,
buy Bitcoin with it, hold it for 7 years, you can't do that as an individual.
Embracing an unyielding enthusiasm for the Bitcoin realm, Saylor confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Saylor reassures that a long-expected surge awaits, leading into the last quarter of 2024.
It's the most liquid, fungible, free capital market in the world. Your New York apartment's not fungible, it's not liquid. I can't panic sell it. So when there's a short-term panic, Bitcoin is trading really, really hard.
Isn't it supposed to be the opposite?
Over the long term, it's up 44% a year every year, and you either get 12% from the S&P with VIX vol, or you take 3x the vol to get 44%. So over the long term, if you're an investor, it's going to be great because it's strong capital. Over the near term, if you're a trader, you get lots of arbitrage opportunities. In the near term, whoever's got the most money can decide whether it correlates or non-correlates. It's like, again, I can lever it up 20 to 1 on Saturday night, and I can trade it long or short.
Worst case scenario of something that would happen in a leverage situation like that with the Bitcoin ETF?
I think what happens is people offshore trading on Binance with 20 to 1 leverage get wiped out on Saturday night. They're the degenerate crypto traders. On the other hand, what you want is a free, open capital market. Everybody can trade it any way they want. And so if you're going to hold it for more than 4 years, you're going to get superior performance with that volatility. I think this administration's been fairly conservative in their embrace of the crypto economy.
Right.
They want to go slow, carefully, deliberately.
But do they want to go, or do they not want to go?
Well, before Gensler entered office, the rhetoric was even more controversial. After Gensler entered office, you heard Jerome Powell, Christine Lagarde, Gary Gensler all say Bitcoin is a speculative digital asset. And that was actually a move forward. With the approval of the ETFs, it was a second move forward. I think clearly we're all waiting for big banks, bulge bracket banks, to start to custody and hold Bitcoin. That'll be the third big shoe to drop. There's a tension between the 21st century and the 20th century. In the 20th century, company comes public, it cost $100 million in 4 years to go public. I know, I did it in '98. In the 21st century, I can create a public crypto token in 4 hours for $100. So you have 100 million companies that want to be publicly trading an asset 1 million times cheaper, faster. That's the crypto economy. The traditional economy is you take 4 years, you spend $20 million a year on compliance. And I think that the two sides are talking past each other. But clearly, the future is faster, smarter, stronger. The political winds have shifted, and I would say that, you know, at this point, the Republicans have shifted to way progressive, and the Democrats are drifting to the middle in terms of their view toward crypto and Bitcoin. You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Saylor challenges the conventional macroeconomic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures, which are selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Saylor also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Michael Saylor? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.